much,
which is not
necessary.
You don't need to risk
too much.
Because when you
Because
risk
when
too
you
much,
risk
you will
too
lose
much,
much.
you will lose much.
That is the logic.
That is the logic.
You risk too much,
You
you
risk
lose
too much, you lose too much.
That is not.
Okay.
Okay. I think we are good to go. Let me share screen. I share the screen. And we are good to go. Okay, I think my screen is on. I think my screen is very on. Okay.
Sure.
Okay. But I don't know whether this one is set. Okay. This one is still loading. What are you loading? Okay, as we are checking the market, this one will be finishing up. Let's go back here. Let's get back here. So currently, as I told you, that we must always first look at the Bitcoin. For those who are new, just know the Bitcoin, we can simply call it the mother coin. It was the first cryptocurrency that was created, so that's why it is always driving the rest of cryptocurrencies. Okay, so the coin is called Bitcoin. Okay, so that's why we need to keep checking on it all the time, because it is the one that can give us the direction of other coins. When it is pumping, the rest are pumping. When it is dropping, the rest are dropping. So it is very, very much important for you to know that the Bitcoin decides at least around 85% of the rest of coins. When it is dropping, most of them they are dropping. You can find like 1 or 2 or 3 coins that are not following it, but at the end of the day, after trend, they can also follow it. Are we getting the point? So before we go further, we must know what we need to consider when we are looking at the coin. Is it going to give us money? Is it going to drop? Or where is the coin going? So first of all, we have what we call the support and resistance. Okay, the support and resistance, and whereby we use these tools to know where the market is going, or to know when are we supposed to trade. Okay, so support, if we talk about support, we mean when you can be able to see on this chart here, I have many lines, but yes, you may not understand them, but you will understand them slowly. So you may not be having as many as I have, but you can also have some lines according to your understanding. So for example, I'm going to remove everything here, then we look at the plain chart. Now this is the plain chart of Bitcoin. Okay, this is a plain chart of Bitcoin. Now if we talk about support and resistance, this is what we mean. Okay, we can see the market moved all the way from here and to here. Okay, here to here. This is what we call a trend. This is what we call a trend, and we just have only 3 trends. Okay, 3 trends. We have uptrend, we have downtrend, and we have the ranging, or what we call the sideways market. Are we together? So I will show you on chart how it looks like, and you'll be able to identify that whenever you see this, that is automatically an uptrend. Whenever you see this, that is automatically a downtrend. Okay, now you must identify what we call the trend. Before you do anything in the market, first identify the trend. I said we have uptrend, we have downtrend, and we have ranging. Now this is an uptrend. You want to trade, okay? Now you must identify the trend. We must use this current trend, then the previous trend rather, then later on we are going to the current market, where the market is currently. What does it mean, and what are you seeing on the market? Which trend is this? And you can be able to know where the market is going. So I'm going to show you how we start when we come to chart. Now first of all, you must know which time frame are you going to deal with. Okay, which time frame are you going to do your analysis from? Because someone can do the analysis on 1 hour time frame, someone can do the analysis on 4 hours. So it's according to you. But since we are daily traders, to me, I would suggest we can go with 4 hours and 2 hours and 1 hour. 4 hours and 1 hour. You can look at those 2 hours and you can be able to identify your entry and your exit. Are we together? So therefore, we said we must identify a trend. Okay, now this is an uptrend, and the uptrend is having the following. It must be doing this. It must be doing this. I think you can be able to see this. Like that. So it has highs and lows. This is high, this is its higher low. Okay, like that. It must be in upward movement. Okay, but not forming one candle at once like this, and you say this is automatically an uptrend. No way. It must move in this way. Are we together? So therefore, this is an uptrend. If you can be able to identify, the market started from here. Here, it was ranging. It was not making a decision. That is the ranging market. If we talk about ranging, this is the ranging. Now from ranging, we can see the market now making a decision of an uptrend. Are we together? Before the ranging, it was a downtrend. So the market is having only 3 trends. 3 trends. And if you can be able to understand them, then trading will be easy for you. It will be easy for you. But without knowing that the market is having trends, there are things you are doing. Because market will definitely move on opposite direction. Are we together? So therefore, this is an uptrend. By having the high, now use capital letter. By having high and low. This is called higher low because it is all together. So it should be moving in that way. High, low, then move up, then down. You can see here again we have another high there, then again it dropped to form what we call a higher low, like that. So it keeps moving like that until it breaks the structure. By breaking the structure, the market will break the last higher low. The last higher low. That is what we call the change of character. If we talk about change of character, what do we mean? What do we mean? This is what we mean. The market was in uptrend. For you to confirm that it has changed into a downtrend, it must break the structure. The structure is this uptrend. That is the structure. This is the structure we are talking about. If we talk about breaking the structure, we mean breaking the uptrend. Now, it started the downtrend. How will you know that it has started the downtrend? The market will simply fail to break the previous high. This is the previous high and the last high. If you see this market failing to come and break it, and again breaking this level, which was our higher low. Higher low. Are we together? This is the last higher low, and this is the last higher high. If this market comes back and break this level, people may think things are hard. Things are always easy. It's according how you understand them. It's according how you give it time. Now, you see, this was the last high. But we can see the market failed to come back and break this level. And instead, it dropped. And we can see the market breaking this level. Why is the market breaking this level? It means it is giving up on uptrend. That is what we call the change of character. It has changed the character. The format or the structure was an uptrend, but it has failed to continue with an uptrend. Ladies and gentlemen, this is the foundation of the market analysis that we always tell you. If they say learn market analysis, this is what they tell you to learn. Understand the market. Now we said this is an uptrend. And therefore, if we break this level, that is what we call the change of character, and you normally see it as choke. You can call it choke. Are we getting the point? Now, can we all be able to identify this choke on the market? How many are following? Can you be able to identify that? Okay, thank you. Now, if you can be able to identify this on the market, then that means you are good to go. Okay? After forming this change of character, the market is not supposed to come back and break this level. That's what you need to understand. So whenever they talk about supply, you will be able to know that this is the supply. Are we together? This is the supply. So we are not supposed to come back and break this level. We can definitely come and retest it and drop, but we are not supposed to break the level. Therefore, if you are trade short, if you short the market around here, that means your stop loss must be above this level, because we don't expect the market, after forming the change of character, to come back and break this level. Are we getting the point? Now, therefore, you must know where is your stop should be. And again, if I'm short the market, where am I supposed to enter from? Now you have realized that this is the change of character, and you don't expect the market to come and break this level. What comes into your mind? It's, of course, knowing that it's time for me to short the market. That's how the uptrend should be. And now, this is the downtrend. You can see, from there, it started dropping down automatically, you can be able to see that. Then from there, now it again stabilizes here, then it went up again. By moving up, it is forming what we call the lower high. The lower high. This is a low, this is a low, then this is what we call the lower high. Are we together? Lower high. Meaning it is still in a downtrend. Okay? It is still in a downtrend. You expect the market to come again and break this level. If you see it is failing here to continue moving up, it means here we are most likely to come and break the level. Are we together? Therefore, if we come and break this level like this, that's what we call the BOS. Sorry, it is called BOS. BOS, that is what? Break of structure. Break of structure. This was the low, and now we can see the market breaking this level. It means it has formed another lower low. Are we together? It has formed another lower low. Now this is a lower low. If you can be able to follow it well, after forming a lower low and you see the confirmation, you can trade. That's what we call, you can trade the pullbacks. Now here, after market stabilizes, you can trade. Okay, you can look at your 1%, 2%, 3% and trade. Now, by applying the other indicators, I think we'll come to that and you understand where to enter from. Now here we can see again market seeing a rejection, showing the rejection. Now therefore the support I was talking about is now this. Market stopped from here and it went back. There is a reason why market stopped from here. Therefore, this is its support when it was up here. And if we come back and we break support, automatically we are going to form another support. As we can see, this is its support. As we can see currently, this is the last support we are having. On 4 hours, this is the support. Now, at this point, this was the resistance after market failing to continue moving up, and it decided to drop down. Therefore, this was your resistance here at this point, though you had a support here. You had a support here. So, you must monitor the market within these points. After breaking this level, meaning we are changing the character. After breaking this level, meaning we are breaking the structure. We are forming another lower low. Therefore, here we can see the market trying to change the character. Why? It failed to come back to this level and break it. Are we together? It failed, meaning this is our support currently, and we have resistance, and this was resistance also. Are we getting the point? If we fail to come back and break the level, this will be our demand zone or a support. We are training you this to trade on your own, that you can wake up and trade without waiting for the signals. Now, currently, this is an uptrend. This is an uptrend. This is an uptrend, but now this is a downtrend because we can see the market has changed. It failed to break this level. Can you see? This level, this movement was supposed to break this area, but it failed. Since it failed, then we can see the market dropping down slowly. It means now we are in a downtrend. This one, the market is no longer in uptrend. The market is no longer in uptrend. Therefore, this is our current resistance. Here we have a resistance here. Again here we have a resistance. Again here up we have a resistance. Therefore, you can have as many as possible resistances, because market has resisted this area. Therefore, it has dropped. And where it is going, it may come here, or it can stabilize from here after forming some candlestick patterns that show us there is momentum in the market. Buyers are taking over. Remember, the market is driven by sellers and buyers. If the sellers are very many, then they will definitely do what? They will definitely win the buyers. If the buyers are taking over, of course, the sellers will be losing. Are we together? So therefore, as where we are currently, the market is still playing us. It is still moving around. No decision as we speak. Okay? Let me look at this, whether I think it is now ready. I think it is now ready. And where is it? I think let me use this. I think it is this. Let it open and we look into it. Okay, this is where we are.
I think it has opened. It's down there.
Yeah, I've seen it.
Yeah.
Okay, this is it, and I think we will be following this slowly by slowly. We shared it. When you have time, you can always go and read. What do you need to be able to be a successful trader? So, introduction, it is candlestick charts. Candlestick charts. If we talk about candlesticks, they are here. These are candlesticks. These are candlesticks. These are candlesticks. And each candlestick you are seeing here, it is now representing 4 hours. Because I'm on 4 hours chart. Okay? If you go to 1 hour chart, it means each candle that you will see here, it will be representing the 1 hour. Are we together? So if we talk about candlestick, don't get lost. Okay? Those are the candlestick we are talking about. Okay? So, consideration to opening trades in Royal True. Key to success in trading. That's what we are going to look at. Oh, will I read all of them? My God. I think you will have time and read. Me, I will just speak small, and we can be able to understand that. But let me read for you the trading. Here we are. Trading is a business like any other. It involves buying and selling of all what was it? I think, was it a mistake? Fred, search with this. I'm not getting it clear. Why is it? Why is it?
Which one, leader?
Maybe that's what.
Let me see. think if we go through this reading uh-uh. Oh, okay. So we have seen that trading is all about buying and selling, and you make profit. That is all it is. It's a matter of buying, selling, and you get profit. Meaning you are buying at low price, you are selling at higher price. So, for example, when you buy a certain coin, maybe the price is 100, you expect to sell it where the price is higher than 100. You will not sell when the price is lower than 100. That is what we call the floating loss. Are we getting a point? The coin was at 100 when you were buying it, but unfortunately it dropped all the way from 100 maybe to around $98. Therefore, you are in floating, but the quantity you bought, it is still there. This goes to those who are trading what you call the spot. You buy quantity. The quantity will never go anywhere. You keep holding your quantity until the price goes up and you are in profit and you sell. That is what we call the floating loss. Are we together? So, meaning, that's why I normally say in trading, we lose time. When you are trading a spot, we lose time, but we don't lose money. Therefore, by losing time, it's when we are waiting for our for market to recover and goes back to where we had bought from. Okay, that is losing time. We are waiting. You get the point? We are waiting. Therefore, by waiting, you are losing time, but you are not losing money. Are we getting the point? We are not losing money. So, here, cryptocurrency is electrical. It is an electric form of money that represented in a number of coins in a digital space, such as we have Bitcoin, we have Ethereum, we have Cardano, and among others. Are we getting the point? So, note that treat this business like any other business. Focus on learning what to do. The skill you are gaining here will pay you for the rest of your life. Are we together? And it can simply pay you 24/7 as long as you manage the skill of trading. And this is what we are trying to teach you, how to trade. When am I supposed to buy? When am I supposed to sell? Therefore, we have many types of trading. Now, this is what we are going to look at. Types of trading, they are here. You are such a type of trader. Are we together? Such a type of trader. You get the point? Therefore, you can scalp. You normally hear scalpers. Those are types of traders. You normally hear swing traders. Me, I'm a swing trader. And you feel like you're confused. Dear friend, everything is here. That's why we share with you to read through, such that you understand. Now, for example, if we talk about swing traders, those are traders. They hold their position for many days, weeks. You can hold a position for a week. If we say position, we are talking about trade. The trading you are holding. That is a position. So you are holding a position for maybe days, weeks, or even months, according to what you have observed on the chart. Are we together? Therefore, you can target a big profits. We normally share with you 30%, 50%. It's rare to happen in one day. Are we getting a point? It's rare to happen in one day. Those are swing trades. We don't know when it will deliver, but what we know, it will deliver. So whenever we share with you 20%, 30%, 50% signal, just know you need to hold it for some time. But we expect that coin to give you that percentage. We don't know whether it will be days. We don't know whether it will be weeks. But what you know, the coin will go there. But we are not sure when. So those are swingy traders. Swingy traders. Are we getting the point? Now, it means you are a busy person. You want to put your money and wait, whether it is a week, whether it is a month, and you collect big money at once. You are a type of trader that we call swing trader. Are we together? Now, we have scalpers here. Those are traders that don't want to spend much of the time in the what? In the market. These are the traders that take advantage of small price movements to take profit, e.g. from one resistance to another, or from one support to the next. You get a point? But these traders, they just trade within minutes or hours. They don't spend a day in the trade. The market is on speed. They enter as quick as possible. They are out. It means your brain must be sharp. You must be on your laptop looking at the market, how it is moving. And therefore, you can be such a type of trader. Are we together? So we have intraday traders as well. These are traders who close their position at the end of one trading day. One trading day. That is to say they hold trades for only one day. Are we together? They just hold trade for one day and they are simply out. They are simply out. And now we are here. We are here and on swing trades as well, because at times we share the signals for 50%, 40%, 20%, meaning we are under this type of trade, these two types of trades. We don't scalp. Maybe if you are there, but me, I'm not that type. Share 3%, at the end of the day, we are out. 2 days, we are out. Or at times, we share those big take profit. Are we together? So here, there is a note. Every trade, you instruct the bot to have a plan on how long you want the bot to hold it. Never allow a trade planned for intraday turn into a swing trade. Always reassess. You go and check. Can I exit from here? Where can I put my stop loss? Go and you assess the market, and you see where you think that the market is going. If it has refused, then you can look for another way. You get a point? That means you should create time for checking on a chart. Are we together? Now, here, we have common terms used in trading. Common terms using in trading. There are many, and I think you will have time and read through. But mainly, we normally talk about trading view. Trading view, it is just an application that we use to do analysis. You can simply get it from Play Store, altogether, or Google, or Google Store. You get the point. So it is just an application, and where we do our analysis from. Now it looks like this. This is a trading view. Okay, it has where to put a list of coins that you want to trade, and when you click on them, they will definitely show you the chart. The chart. This is what we call the trading view. Are we together? So we use it to do our analysis. Now from there, you normally hear us talking about bull market. Bull market, when the prices are going up for long time, not just 1 year, not just 2 years. Are we together? That is what we call the bull market. Bull market. As we are also still in bull season, yes, you can also call it bull season, because we are on the last year of the bull market. Are we together? So next year will be bear market, and we can see here we also have bear market when the price are going down for long term, and next year the market will be definitely going down and down and down, slowly, not at once. It can drop, it can again move up, it can drop, then again move up, like that. All together. So it may not move down like with one candle. It will can create one candle red, another one red, then another one green, another one red, like that. It moves slowly by slowly. So that is it. And we have a stop loss. The stop loss, it is used when you are trading futures, and some are using it when they are trading a spot. Now, what does stop loss mean? What does stop loss mean? Here we are here. This works in a futures market. It helps the bot to automatically close your trade when it is not in your predicted direction, to minimize the loss. For example, I may enter the trade with maybe $100. I expect to make maybe $10 or $20 as profit. But now, I'll now say, you know what? I'm seeing this market is moving up. I'm supposed to long the market. I'm going to show you. I'm supposed to long the market. If I long the market, for example, why not picking? What is it? Network? I don't know. It is not picking up. I wanted to show you here, and it is not coming. But I'm going to show you with this. Okay, for example, now this line, it is the lowest point of this candle. It is the lowest point of this candle. If I want to trade this coin, why is it not coming? Why is it not coming? Oh my god. Anyway, let's go. This must be my stop loss maybe. I'm thinking that this coin will not come back to this area, and now this is my stop loss. And my take profit, maybe it is here at the resistance level. So I will definitely come and do this. That, you know what, I want only 1%. This is my 1%. If I want 2%, it is here. 3% is here. And now this line here is my stop loss. I have invested my $100 here. I expect this coin to move up, and this is my stop loss. The stop loss, if this market comes back and break this level, it means they have hit my stop loss. I will accept a small loss and I get out from the market. Are we together? I will definitely accept a small loss. Now, for those who never used the stop loss, you have realized that if the market drops from nowhere, you will lose all of your capital. Mostly when you are trading under close, you can definitely lose all your capital. Are we getting the point? Therefore, the stop loss will help you to allow a small loss, and you remain with the balance. You invested $100, you are allowing to lose $10. In case of anything, you are remaining with $90. This will help you to keep in the market. Why? You can again go and look for another trade, and you trade. Are we together? And you trade. You can. But without stop loss, do you know that you can lose all of $100? For example, if you are trading futures, you can definitely lose it all, because you don't have stop loss. You will find the market when it has dropped, maybe it is here, and you are in negative $95. Are we together? So this stop loss will always help us to minimize losses, because at times you may lose all the money. You were not around, market dropped or market pumped, you were shorting the market, and you end up missing out. But now, what we are observing here, we are seeing a good rejection from the market. If it continues like this, and I think we have 1 hour to go out of 4 hours for the candle, we have only 1 hour to go. It means if this candle closes like this, the way it is, that is a good indication that the market has rejected this area, and now we are pushing up again. Are we together? So that is the use of stop loss, guys. Don't leave it behind. Are we together? Don't leave it behind. Okay, so we have pump and dump. Pump and dump. People can come in with good money. They look for the coin which is having a low volume. In trading, if we talk about volume, we mean money. Volume means money. If we say low volume, it means the coin is having small money within it. So banker can come in and say, this coin is having small money. We can simply put our money and we pump it. You can see the coin pumping from nowhere, 50%, 80%. That is it. They will put money. After getting what they want, they will remove the money and profit. And for you who has bought at the peak, you will dump with it. And I think it will take time for you to recover. So that's why you need to avoid the pumping coins. At times, they are pumped with reason. Then, after pumping, they dump. They remove money, and it will definitely drop down. Are we together? That is it. That's what they do. So, when you are holding, you hold the coin that are having enough volume, that are having enough money within. You get the point? Don't trade the coin that is having, even not having 1 billion. even not having 1 million, and it is just there. Meaning anytime they will come in, they put money, they pump it, they collect money from you, and they dump it. And that coin will never go up again. So you have heard people talking about whales. Now, a whale is a person who is having too much money. He can pump the market alone. He can pump a coin alone. They can invest millions and millions of money. We are talking about millions of dollars. They can definitely put it there. And they pump. After pumping, we are not talking about banks. Those are institutions. We are talking about an individual having money, pumping the market and dump it again. You get the point? So, you will go ahead and read about the common terms used in trading, and I think we will be passing through in this several times within a week, such that we can be able to understand more about it. I will not go in details, but I'm trying to show you where we start from and where we are going. We are on candlestick chart. Candlestick chart. These are two different candlesticks. Okay, these are two different candlesticks. Now, this red one, it means bear. The market is dropping. Are we together? And its high is this one. It is this week. Its high is this week. And its open is this body, where the body started from. But since it was bear, the body must be created as it is dropping down. Are we together? It means downward point, it is its close. It will close down. Are we together? Its high is this because of this wick. But the candle was opened here, where the body started from. That is its open. Then its close is down. Its lowest point, it is this wick. This one we call it wick. Then this one we call it body. So the candlestick is consist of body and wick. Are we together? Body and wick. Now we have a green candle. You can call it bullish candlestick. Now the difference is here. The open and close will now be vice versa. The green candle, its open is always down. It is always down because the green candle is created while it is coming from down as it is going up. Are we together? Its open is down, then the lowest point, they are all having lowest point down as well. Then it is having a body, then its close this time is up. The close of a green candle is up, and its highest point is also up. Are we together? It is also up. It is also up. Now, that's how you can identify the candlestick. This is a red one and this is a green one. You'll have time and read about it here. There is some good word. And for example, on number one here we have open, and now they are explaining the price when that time period started. Are we getting the point? When they start creating a certain candle, immediately the starting point, that is what we call open. Then the close, when they ended creating that candle according to the time frame. According to the time frame. When 1 hour was expiring, when the price was, they stop from there. They stop from there, and that is the close. The period ended at that moment. That is its close. Are we together? you will read through it and you'll be able to understand. And here we have candlesticks. We only have green candle and red candle. Okay, whether it is small, whether it is big, but it should be green or red. Are we together? And we say the red means bear. The market, the sellers are taking over. Green, buyers are taking over. Okay, that is it. Consideration before you open up a trade in Royalty. Trading is about waiting for the best setup. If you just rush or based on guesswork, you will end up being stuck in floating loss. Are we together? Or if you are trading futures, you will end up being liquidated. If you just jump into the market without considering the structures and what, you will end up losing out, or you are stuck in floating. Are we together? Now here, I think you always ask before you decide to enter the market. If you feel like you're not accurate enough, you can definitely ask, and we will be able to answer you. Okay, now what you need to identify from chart, what is the market trend? Like I told you, we must know the trend. Are we in uptrend or downtrend? Then if we are in downtrend, how do we trade in downtrend? Question number 2, where are the key zones? The key zones that we are talking about are these ones: the support and resistance. Those are key zones. Support and resistance. Within these two, we can have more supports. If you can go to 1 hour, you can have more resistances. Are we together? Those are the key points we are talking about. If we talk about key levels. Now here, where are the key levels? We have key zones and key levels. Are we together? Now we have what is the price action. If they talk about price action, we mean the breaking structure. These ones, BOS, change of character, that is price action. Are we together? The market is breaking resistance, it is breaking support, that is the price action. Are we together? Now from there, we go to market trends. Before you do anything, you must identify the trend of the market. Okay, uptrend is here, like I've showed you. It is having high and higher lows, high and higher high, then higher low. Then sideways, it is always not deciding. Like here, the market was not deciding. Here, look at this point here. It was not dropping, it was not raising, just there. That is what we call the sideways. This one, until it breaks out, you just do this, create your box like this. If we break down, then meaning we are dropping. If we break up, then meaning we are moving up. This is how you do it. But in most cases, you find that the ranging market, at times, it is looking nice. If it is making sense to you, at times it can move like this way, and that means I can simply come and I trade here. I get out in the middle. I wait for the market to come back to this zone. I get out in the middle. But you don't need to trade it several times. You can trade it like 2 times and you are out. Out together. It means I'm targeting the middle area. If this is my support and resistance, okay, up here I have resistance, down here I have support. Now I will put a middle line like this, straight one. I always trade down here, I get out at the middle point. I trade down here, I get out at the middle line. That's how we trade the ranging market. But After breaking out or down, there you confirm the trend. Here we are in just arranging sideways. Are we together? But after breaking out here, automatically it is going in a downtrend. Are we together? Now therefore, that is what you are seeing here. This is arranging, this is an uptrend, and here we have a downtrend. And downtrend is having what we call the lower lows, high, low, then lower low, and again a lower high. It's like that. And currently, this is it. This is our downtrend. Can we be able to see it? This is it here. That trend we are seeing here. After creating this high, it started dropping, 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 dropping. And now, I told you, this is the last support. That is the what? The last support we have. If we fail to break it, then automatically we are going to break this resistance level. Okay? Okay. Oh, where are you going? The trend refers to the general direction of the market. General direction of the market. In trading, the trend is your friend. Every time you try to trade against the trend, remember that you are giving your money away. Are we together? We have only 3 trends. First, identify. Then look at how you can be able to trade it. I may not be good at explaining, but I think you can be able to pick something. Remember, I'm not a teacher by professional. You will forgive me. Now we have an uptrend, bullish trend. That is how it looks like. You can be able to see that when you put a trend line, you can be able to see that it is respecting that line. It is coming back, touches the line, move up. Coming back, touches the line, move up. And that is how the uptrend looks like. It is having highs, low, higher lows, highs, then higher lows, like that. That is an uptrend. Okay? And you know how to trade an uptrend. Now here we have a downtrend. It refers the general market movements of the market where a coin this it is decreasing in a price. It is dropping down slowly. In this trend, the price will go up sometimes, but the uptrend movement will be short term. Are we together? Or mid term. And the market continues to dip to the lowest price. Slowly. It will keep dropping. Even though I told you, we can see a green candles. Even though we are in a bear market, we can see them. But they will not be for long term. They can create like 2 green candles, 4 red candles. Just know that the general trend is downtrend. Hope you are picking something. Sideways movement. Here the price is fixed between what? Between two price. When it reaches the upper price, it pushed back down. When it reached the downward side, it pushes back. It pushed back. So it keeps touching these 2 areas, like I've showed you here. It touches up, then down, up, then down, up, then down, without breaking these areas. That is the sideways market, and I've clearly showed you, and even here they are showing you that the price is fixed to 2 prices. Are we together? Up, down, up, down. But to be on safer side, you better focus on the middle. You can bisect these 2 lines. Just put a middle line. To be on safer side, For you, when we touch the downward, enter. In the middle, get out. Because at times, the market may not reach on the upward line. Are we together? Okay. These are key zones. We have supply and demand. Are we together? Key zones, supply and demand. The price respects the key zones because that it's where the big boys or big banks or institutions put their money. Trade with others, don't trade alone. You must enter the market when the most of people are putting money. But remember, they put money when the market is at resistance level. They will put money when the market is at demand level. I think that is it. And we have the supply zone. And that is how it looks like. You can create your supply zone after a trend. After uptrend mostly. That's where we put a supply level. And we believe the market will drop to touch the previous demand and will come back to the supply level. Are we clear? So get time, read about demand and supply. Yes, read about demand and supply. We have key levels here, which is resistance and support, like I told you. Now the resistance is always up, then support is always down. The market has touched that level several times, therefore the line will become a support or resistance according where it is. Price respect the key levels. There are two key levels whereby you have support and resistance. Are we together? Now the support, you can be able to see it here. The support, I have clearly showed you the support. Now here, this one is a support. Market respected this area, it changed the direction. Therefore, this one is the support. Are we together? And now, this one is a resistance because market had respected this area and it dropped, meaning it is a resistance. You can also call it supply, and you call this one demand, and you trade. Are we together? I never shared a signal in the morning because market was confusing. It was not clearly showing the direction. So that's why I never shared. And I think we'll get 3 or 2 trades to trade. Okay, we can look at price action. I have told you the price action. It is always about breaking the structure. Okay, breaking the structure, breaking resistances, trend lines. Yeah, that is a price action. And here we have keys to success in a trading. Master the risky management. Out of your $100 as capital, how much do you risk? Do you have a stop loss? Those are risk management we are talking about. Control your emotions. Don't chase the market. Those are emotions. You feel like chasing the market is pumping, and you trade nowhere. You just enter because the market is pumping. What have you considered? Control your emotions. Are we together? And have a clear strategy. If you don't see what you want, don't trade. It is not a must to trade every day. If you don't see what you want from according to the strategy you have, then there is no need to trade. Now here, keep learning and adapting. Are we together? You must keep learning and you practice. Trade with patience and discipline. If you have your target, keep in the trade. You have your stop loss, keep in the trade. Because You analyzed your coin, you know where it is going. Then why are you closing the trade in loss? Don't. Okay, that is it. I think that is it. Maybe if we have some questions there, but that is it. And I believe the market may be recovering, and we're gonna have some coins to trade. Do we have any questions there? Me, I'm done. Me, I'm done.
Excuse me.
Yes, please.
Yes, Peter, good morning.
Morning. How are you?
I'm good, how are you? I'm requesting, since you're saying that now the market is recovering, you help us, we see how you are buying it so that we follow very well.
How am I doing? What? How am I?
How you identify a signal now, like the way the market is better?
Mm, it is okay. You are here. As long as you are here, then we can get what to trade. But like as we said, you must have a strategy. Then now, what is your strategy? Now, I normally share with you. You mean today I have no indicator here? Where are they? My God. Okay. Oh, why? They are not opening up. I wanted here. On favorites. What is the problem? These indicators are not showing up. Showing up. I think for those who are following us on YouTube channel, your session is done. Your session is done. I'm still looking at the coin to trade right now. People want to see how do I normally choose a coin to trade. Let me first close this class on YouTube, then we look at coin to trade. Okay, just a minute, we close it.